So today I've got a week ahead preview for you guys. I'm going to talk about some stocks that are going to be good ones to keep an eye on for this week, and also some key events that are coming up that might affect the stock market going forward. Before we do get onto that, I just want to say apologies for the late video again. It's just been an absolute crazy day. And as well as that, if you're on the Patreon, I did drop an exclusive video on there over the weekend, which is the stock request. And we took a look at Pinterest, which is a really good video because it shows some things that I look out for that I would point to as red flags when I'm looking into a business. As like, this is why I would not invest into that business. So yeah, go check that out if you are on the Patreon. And also, apologies for yesterday's video. I talked about property investments for a little bit of a change. Thought it was a good mix-up and clearly quite a controversial video. There's a lot of comments on there that was disagreeing with the whole, buy-to-let landlord system that was in. I know that was always going to happen, but yeah, quite a controversial video over there anyway. But yeah, let's get on to this week. So a couple of key events to look out for. First of all, I think it's on the US side. So yeah, we've got the initial jobless claims, and then also we have the unemployment rate and non-farm payrolls. Big things that the Fed will be looking at as well if they are going to do this interest rate cut in September that a few people have been talking about. Obviously, I think the market is taking a little bit of a step up with the expectation of that to be happening. And also from a UK point of view, UK retail sales, so any stocks like B&M, JD Sports, obviously, key numbers for them guys that give you a bit of a, how's the high street been doing. I expect them to be decent considering the weather's been pretty good, but we'll see what happens there. And while we're on about high streets, shout out to stocks of last week. JD Sports up around about 3% in the last month, up 14%. And if you were able to catch it at those kind of June lows where the stock dipped to about 70p, you're up 34%. And when the stock dipped to 60p in the April lows, a big rally up of 42%. And it just shows you that sometimes, these results that have come out from JD Sports haven't been amazing. But when you're such a low valuation, it doesn't take much for it to go right when you're at those sort of valuations. And also the other reason of like why you can't predict the stock market. Like if you try time the stock market and be like, oh, I'll wait to like clear signs that JD financially have turned around. Like people are already gambling, like the numbers are starting to turn around a little bit. And you can see here from the lows, what a bounce that has been. So, yeah, hopefully some of you guys are doing well on JD Sports. I think I'm up about 20%. And from a US point of view, I also want to say SoFi, that had a cracking week last week as well. Being on a fantastic run this month, up 20% at the moment for SoFi, and that just keeps pushing on. Shout out for a stock last week as well, Alibaba. Pretty good month as well, but particularly the Friday. Big bounce on Friday. And then looking at because obviously the US markets were shut. Alibaba shares jumped even higher when the Hong Kong listing opened up, so more buyers coming in from that point of view, and actually jumped up 19% on Alibaba. First time we've seen a bit of life coming into Alibaba for a long time. Obviously, a lot of talk about the cloud unit accelerating, and also a lot of talk about this new AI chip at the moment. So because it's been a stock that has had a tough time really for a long time since 2021, but now starting to kick on a little bit, which is been good to see for Alibaba as well. So yeah, anyway, moving on to stocks to be watching this week. So we've already had XP Factory, or Escape Hut is the image that's used here this week. Let's switch across to, where have I gone? Wrong slide. So we've already had Escape Hut on the UK side of it this week. Personally for me, not one that I'm that interested in. I just think it's so hard to make money in the bar space in the UK. It's not very profitable, and you know what, I think the venues are actually really good to be fair, but it's just so hard to make profitability in this space, and I don't think there's much loyalty, much moat, so not one for me, but I know it's very talked about in the UK space. On the Tuesday, I got to say, tomorrow, Everplay are actually reporting. I got to say, I used to own this stock. I started buying in when I was having this dip, and I don't know why, but I took a bit of a quick profit from it, but God, this has had a right bounce up at the moment, so yeah, big bounce up from Everplay, so we'll see what numbers are going on with there. The other thing with Everplay is that because of the industry that it's in, it's really hard to predict if it's going to do really well, because you're kind of like waiting for the games, and quite often when these games, like, they get built up to be, the next big thing, and then all of a sudden it can be an absolute stinker. And then the other times is that you can have, like, out of nowhere, this game that wasn't expected to be a big title that goes on to do really well. So it's always a really hard one to forecast there, but yeah, well done to any of you guys are still owning shares on that one as well. And moving on to the Wednesday, Ashtead are reporting. I know a few people are interested in that one. Churchill China are reporting. Those guys have been absolutely battered at the moment. I'm keeping an eye on them ones. not close to buying, but it's on my watch list at the moment. And then the biggest one for me there is going to be Watches of Switzerland that are reporting. So yeah, I'll be looking to see what's going on there over the last few months. That's been bleeding a lot, down 26%. So I guess the fear is that this tariff situation is going to really hurt them. So if they post results and they just, we're not even expecting like ahead of expectations results, just if they just say that they're in line and they're going to hit full year guide, that'll be good. So if they hit that and you look at the valuation, they're at 8 times earnings, 7 times forward earnings. Their expected revenue to tick up nicely as well. Net profit to have a nice little jump this year and next year. If they hit those numbers at 8 times or 7 times forward earnings, looks really good value. So hopefully this, I think the market might be getting spooked because I think they're gonna do a profit warning, because I think they're expecting that a few people were loading up on luxury watches before the tariff situation, and now it's bleeding down because they think they're going to get impacted by it. So yeah, if they can do it in line with expectations, I'll be really impressed with that, and that will give me a bit more confidence to keep adding into that one. So that's certainly one that I'm going to be watching that reports on Wednesday. On the Thursday, we've got Vistry Group. I know Vistry Group, and a lot of people like that one over there. Safe Store, Currys are reporting. The big one for me is Eurocell. So I own shares in Eurocell, and I've got to say once again, I'm expecting probably a worse report from Eurocell than Watches of Switzerland Group, because I'm looking at like companies that are like the home improvements, and they've still not seen any signs of recovery. So I'm expecting Eurocell to say exactly the same. Like, we've seen no signs of improvement at all. But all I'm looking for them to do is a bit like Watches of Switzerland Group, is not do a big change in the guidance. And if they do that, that'll actually be really good from Eurocell. And looking at the numbers once again, like the valuation, you're looking at 8 times earnings, 5 times forward earnings, and decent growth on the revenue from that acquisition, and a big jump expected next year with some form of recovery, and I'm expecting. And if you look at net profit, big improvement of net profit and another jump in next year, and that's probably like the scale of revenue coming in, just flowing down to the bottom line, levels of efficiencies. This year is obviously the boot is from the acquisition and obviously cost cutting. Eurocell's been actually really good at the cost cutting side of it, and that's why even though revenue has been stagnant for the last couple of years, the profit has actually increased really nicely, or stayed at pretty good levels, is because they've been able to be very efficient. The problem with being efficient is that you can only be efficient for so long. Like, for only so long you can start keep cutting corners, and it eventually catches up with like your service and your quality of service and stuff like that. So yeah, it does need to start kicking on at some point, Eurocell. But like I said, with the valuation they're at, and how tough the environment's been, if they just come in with a inline update, that would actually be really good from Eurocell. And that would be at a point where I'd actually probably go and maybe look at increasing my position into Eurocell. We move across to the US markets. We've got Neo that are reporting. Them guys were really popular many years ago, but maybe not as much now. Zscaler are also reporting. On Wednesday, we've got Dollar Tree, Macy's are reporting. Salesforce is probably the big one of the week I'm going to go with. These guys have had a bit of a tough time at the moment. You can see here the stock peaked around the back end of 2024. Since then, the stock has had about a 30% dip in Salesforce at the moment. The problem I have with Salesforce is that I'm not really, I apologize because a few people might be watching this video and they might be really knowledgeable in Salesforce, and I might sound like an absolute potato here because I don't know the company that well. But the only thing that's stopping me from doing like any DD, like serious research into Salesforce, is that it's this, okay? So, revenue growth is at 8% at the moment, and next year it's supposed to go to 9%, but still single digit at the moment. And Salesforce at the moment is currently trading at 35 times earnings on a trailing 12 months basis. Next year is on 22 times, and the year after that is on a 20 times forward P, which isn't too bad, but you're still paying like, 20 times earnings for a company growing 8-9% a year. And the problem is that they're expecting a big jump in profitability. Now, I'm guessing that's because of, not investing as much in the business, maturing a little bit. But also I'd say that the revenue growth, when you look at someone like a Salesforce, has dramatically been slowing down. And the problem is that when your revenue growth is slowing down, that says to me that you're at a big stage of saturation, but also competitive side of it, and you're not taking as much market share. And if you're not taking as much market share, the way you combat that is normally by price cuts. So if you are expecting a good profitability growth, that's if you maintain your margins. But if you want to be price competitive to get your growth back, that's also an issue that you're not then obviously going to have that profitability level. The other issue that I have with Salesforce is that I think it's going through a time where it's having to switch now from a company that was previously like a big revenue growth company, and now it's switching to a value position where it's a value shareholder base. And at the moment, I think it's in the awkward middle, because growth investors are going to look and go, I'm not paying up for 8% revenue growth. And value investors are going, I'm not paying up 20 times earnings for a company growing at these levels. I think Salesforce would realistically have to come somewhere like a maybe 16-fold times earnings business, like another 20% drop for me to be like, yeah, okay, I'll buy it. And I always compare it to like other stocks I own. And I look at someone like, for example, like Adobe. And Adobe at the moment is, what's Adobe on 2027's numbers? It is, so 15 times earnings, so it's a quarter cheaper. I know they're doing a lot of share buybacks at the moment. They're actually outgrowing Salesforce at the moment. So it's a bit like, why would I go buy a Salesforce? So at the moment, I've not seen the numbers looking attractive enough for me to like take the serious DD research into it. But hey, some of you guys might know that a bit better, and you'd be like, actually, you know what? This could actually be really good valuation for these sort of levels. So I'll leave that with you guys to see if I'm a little bit wrong on that one. And then we have got another AI company reporting. I'm not seeing where they are at the moment, C3 AI. And then Figma. That's got to be Figma's first public earnings report as a public company. So that's going to be interesting. And then ChargePoint are also reporting. On the Thursday, not too much on the morning. On the afternoon, we've got Broadcom, Lululemon. We'll talk about those guys in a second. DocuSign is always interesting to me. UiPath, I've never been interested in that one. I've always bashed that one, to be fair. And that's about it. So, the only other one that I'll be interested in is Lululemon, that are reporting on the Thursday. Now, these guys, I used to own Lululemon, and I made some really good money off it. But since the back end of 2024 into 2025, January time, stock peaked about $414. And since then, it's fallen like by half, which is a significant drop down there for Lululemon. Now, looking at the company, they're expected to do 7% revenue growth, which is actually not too bad at all. And current year, 5% growth overall. Next year, 6% growth. Okay. If we look at what Lululemon is currently valued at on a P ratio point of view, if we go on Stockopedia, so yeah, we're at about 13 times earnings, and we're going to stay about 13 times earnings, so a little bit of an impact in profitability at the moment. The only thing that's putting me off with Lululemon is the apparel space always makes me nervous. I've already got one play in here, so I don't know if I want two plays in the apparel space, and it's all about trends. And the problem I have with Lululemon at the moment is that I don't know if it's going out of trend, because, okay, they had the surge from 2021, 2022, people still had, big money to spend. And then 2023, we kind of got back to, a bit more reality. And since then, the revenue growth went from 24% to 18%, down to 10%, down to 7%. And then they had the re-acceleration, which was great. And that's why the share price had that little bit of a lift up, as you can see here. But then since then, the company has then gone back on a deceleration, and they've gone back to 7% revenue growth, which isn't great. And that says to me they're losing market share, they're losing popularity. So if they showed signs that they could maintain a 7% growth and maybe even accelerate a little bit, that'd be amazing. But the thing that's making me nervous is this 7%, then 6%, then 5% for the full year. And yeah, unless they're saying 6% next year, but they're just guessing. They're throwing arrows at a dartboard there to get that number. So I'd like to see some substantial maintaining of that growth in Lululemon, not that it's going in the wrong direction all the time. The other thing is, like, one of the key things for Lululemon is the international markets. Like, that's been a major growth driver for them. So I'd like to see proof that international market is also holding up as well, because that's been every quarter going down in the wrong direction. So yeah, Lululemon is up on my watch list as one to buy. But I've just got to make sure that they maintain growth. And the problem is, at the moment, it makes me nervous because it looks like they're losing market share. And I've just got to see proof that, that is holding up and they are still growing. So I'm watching that one. That's going to be an interesting one on Thursday. And I'm sure that's going to also move a ton as well when they report earnings. So yeah, just a couple of things to watch out for this week. So hopefully, a little bit of useful information in there for you guys. Thanks for watching. Have a great rest of the week. See you in a bit.